Good morning, everyone. Well, in the absence of any real market-affecting news, it's been central bank policy that's leading the market. The dollar was generally lower, although really without anything specific going on in the States to move the market, move the currencies. Stocks, bonds, and even the Fed funds futures were really little changed and didn't give any clear direction to the market. The Australian dollar was the biggest gainer after the fourth quarter inflation figures came out much higher than expected. Inflation now in Australia is in the upper half of the Reserve Bank of Australia's 2% to 3% range. That may force RBA Governor Stevens to stop trying to talk down his currency. His comments have been a major reason why the Australian dollar has been declining recently. My view is that lower inflation is a global phenomenon. It's not just localized in the Eurozone or the US. And so the RBA really won't be concerned about a slight uptick in one quarter. Therefore, I don't expect them to stop their campaign for a lower Australian dollar, and so I expect the Australian dollar to continue to depreciate, although maybe not today. The yen also gained overnight after the Bank of Japan refrained from taking any new measures at the policy board meeting that ended today. Frankly, I can't believe anyone expected them to take any measures, so I think this is just an excuse for profit taking. Since most of the economic indicators in Japan are generally moving in the direction the Bank of Japan expects, I think they're likely to wait until after the hike in the consumption tax in April and gauge the economy's response to that before taking any further measures. I expect the yen to resume weakening in the near future, particularly if, as I expect, the Fed does continue tapering at this month's meeting. That should encourage more investors to switch their funding out of dollars and into yen and set the stage for further decline in the yen. On the other hand, the Canadian dollar was the main loser against the dollar today, as the market priced in today's Bank of Canada meeting, although the Canadian dollar did recover from its lows overnight. Economists unanimously expect the Bank of Canada to keep its benchmark rate at 1% today, so the focus will really be on the press conference afterwards and whether Governor Polo Skip provides any clues about lowering rates in the future or generally the direction of monetary policy and what he wants for the currency. Confirmation that the Bank of Canada favors an easier policy is likely to put further downward pressure on the Canadian dollar, in my view. During the European day today, investors' focus will be on the release of the UK unemployment rate. It's estimated to have fallen to 7.3% in November from 7.4%. That's closer towards the Bank of England's 7% threshold for considering a rate hike. Now, although the bank has said it's willing to maintain a loose policy even after the threshold is reached, especially with no concerns on about inflation now, I expect the market will react positively to the release of a lower unemployment rate, and therefore to push the sterling higher. For technical analysis and more trading ideas, please see the full comment on our website, IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.